on a beautiful day in Vancouver. We're at the Sprott Natural Resource Symposium with Adrian Day, founder and president of Adrian Day Asset Management. Adrian, thank you for joining us once again.
Well, thank you for having me, Rachel.
Yeah, we love to have you. So welcome to the show.
Thank you.
So let's discuss some things here. So in the beginning of this year, there was a lot of buzz around the market, but now it's a bit of a lull. We're at the bottom of the bear market. What should investors be thinking? What should we be doing?
Well, you're right. Gold often has this early year sort of enthusiasm and run-up. You see it most years, and then you get a bit of a lull in the spring, late spring and summer.
Mm-hmm.
This year, I think it was a little bit exaggerated both ways. Gold ran up, and now it's down again. We had a lot of optimism about President Trump's economic policy, tax cuts, tax simplification, deregulation. None of that has really happened. And so I think you're beginning to get a turn of optimism on the economy, which is optimism on the broad stock market, and negative for gold. And you're beginning to get a bit of a turn now. So people are beginning to be a bit more optimistic about gold.
Well, last time we spoke, we discussed the Trump administration and how the uncertainty is affecting the gold price. What is going on now, and what can you comment about the Trump administration that is worthwhile for investors to listen to?
Well, I think you've got a few things. Number one, you've got the geopolitical uncertainty. You've also got the domestic uncertainty with a dysfunctional administration and dysfunctional Congress, not getting bills through Congress. Uncertainty supports gold. But you've also got the optimism that you had surrounding Trump when he came into office about the economic agenda, cutting taxes, reducing government waste, cutting back on regulation. That optimism is fading fast.
Yeah.
And so that optimism was a drag on gold, and that optimism is fading, so it's removing a drag on gold.
Now, at the conference here itself, what are some hot topics that you've been hearing?
There's certainly a lot of talk about the geopolitical risk, with what Tanzania is doing in the last week,
What have they been doing?
Well, one thing they did yesterday was ask Acacia, the only gold-producing company in the country, they sent them a tax bill equivalent to 195 years of production.
Oh, boy. Oh, boy.
It's crazy. I don't know how all that's going to be resolved, but Tanzania, which, 5 years ago was ranked fairly high on the list of safe jurisdictions, or relatively safe jurisdictions, has suddenly shot itself in the foot. And the problem is with countries like that, they can shoot themselves in the foot and go from near the top of the list to the bottom very, very quickly. Investors tend to have pretty low tolerance for something like that.
Right. And at this conference, what are some company names that are doing pretty well in your books?
Altius I like a lot. That's,
Altius, all right.
Which is not gold, of course, but broadly in the resources generally.
Yeah.
Metalla, which is a royalty company, it's only been going a year, and already they've got about 5 royalties, 3 producing royalties. They're growing very rapidly.
Well, specifically, are there any company names, not necessarily here, but maybe that you know of, that are doing sizable dividend payouts?
In the resource sector, there aren't many companies that pay dividends. And I think, frankly, for most companies, it makes sense. You've got to be a special type of company in this space
to be able to do it.
Yeah. If you're a miner, you're in a capital-intensive business. When you find a project and develop a project, you've got to go out and raise a lot of money. What is the point of going out and raising a lot of money and diluting your shareholders and turning around and paying a dividend of 1 or 1.5%? It really doesn't make any difference to anybody.
Right.
But it's still diluted in the amount of money you just raised. It doesn't make sense. And frankly, for most mining companies, I don't think they should pay a dividend. Now, if you're a Franco-Nevada, which is a royalty company, where you're getting tremendous free cash flow, it makes sense to pay a dividend.
Right.
And you see, the problem is, typically in this space, when miners do try and pay a dividend, they frequently run into a problem and have to cancel the dividend. My thinking is, the worst thing you can do is initiate a payment and then cut it.
Right.
Because it's worse than never paying it in the first place. A company that can pay a consistent dividend and increase the dividends year after year after year, it's a sign that they're obviously doing something right.
Exactly.
Doug Casey has that wonderful, irreverent phrase that a dividend is an outward sign of inward grace, which is actually the Catholic Catechism definition of a sacrament. That's why I say it's irreverent. but you know, it's true. You look at a company like Nestle. Nestle has increased its dividend every single year except one for the last 30 years. That's a great track record. Among dividend payers, we're very keen on what are called business development companies in the States. If your investors are in the States, they lend money to small businesses, and some of those companies are having yields of 9 to 10%.
Right.
One we like is a company called Ares. Ares is the largest of the business development companies. It's about an $8 billion company. Their yield is 9.3%, fully covered by earnings.
Wow.
And it's a dividend that's gone up it's consistently gone up.
Right. And in your newsletter called Global Analyst, right? What are you writing about now that's maybe notable and we can share for our audience?
The big theme would be we're rotating out of U.S. stocks. I think
Right.
the U.S. stock market generally, notwithstanding what I just said about Ares, the U.S. stock market generally is overpriced. Doesn't mean I think there'll be a crash anytime soon. That's not the way I think. I don't think what's going to happen. I think what's the risk, what's the reward. U.S. market to me has a lot of risk. So we're looking at resources, particularly gold. I like copper as well. Copper on a 3-5 year basis I think is extremely attractive because of an impending shortfall in new production.
And if I'm right, copper price is on the up right now.
Copper prices are on the up from extreme lows.
Right.
We're also finding good values in Hong Kong, Singapore. We don't invest directly in Chinese companies because of the opaque nature of the books and records. You never quite know what you're getting. But if you invest in a Hong Kong company that does business in China, you're getting the benefit of the sort of China exposure. But you're getting companies that are, I hate to say well regulated because I'm a big opponent of regulation, but whose accounts you can trust.
A little bit more transparent, let's say.
Very transparent, and you can trust them. Singapore is another very mature market in that sense, very open market. We're seeing companies trading in single-digit PEs, yielding 4, 5, 6%. And growing.
Gotcha.
You know, some of the Hong Kong property companies, I wouldn't be buying the high-end residential because there you're reliant on Chinese buyers who may, because of a crackdown on taking money abroad, you may see an exit in that area and they're very overpriced. But if you look at some of the Hong Kong commercial companies like New World Development, New World Development selling at an 8 times price multiple, yielding 4.5%, and it's a superb number one tier company.
Right. We'll keep an eye on that. Thank you so much, Adrian.
Okay, thank you.
All right. So to learn more from you, where can our viewers go?
The website would be www.adrianday.com.
All right, Adrian, thank you so much.
Thank you.
To learn more from Adrian Day or other experts like Adrian, you can go to the website smallcappower.com and watch more videos.